Some days the markets move fast, and some days it moves just slow enough to trap you. Corn doesn't break, beans don't rally. Cattle hold firm, hogs slip, and wheat barely moves at all. But here's the pressure point. Quiet markets are often the ones setting up the next big move, because producers don't usually get hurt by obvious moves. They get hurt by hesitation, waiting too long, selling too early, or assuming the market will do what it should instead of what it does. So tonight, we're breaking down what actually settled, what the market is signaling underneath, and the two forces that could shift everything: supply reality and demand surprise. Let's get to it. Good morning, and thank you for spending your morning with me. This is Boots and Bushels, where we cut through the noise and focus on what producers actually need to know. And a quick note, this is market commentary for educational purposes, not financial advice. Markets under pressure. Corn continues to drift without conviction. March corn settled at 428 3/4, unchanged on the day. The market still isn't seeing enough of a threat to force buying, but it also isn't comfortable enough to break lower. For producers, this kind of slow trade can quietly eat away at opportunity if marketing discipline slips. What traders are watching now is whether demand, especially export pace, can give corn direction, or if the market continues to stall. Soybeans saw heavier pressure. March soybeans settled at 11.10 and a half, down 4 cents. The trade continues to balance a large South American crop against harvest delays and uneven field conditions in parts of Brazil. Big production alone doesn't always break the market. Execution matters. If logistics tighten or quality concerns expand, nearby supply can firm quickly. The soybean market remains sensitive to export demand signals and Brazil harvest pace. Chicago wheat stayed quiet, but that doesn't mean unimportant. March Chicago wheat settled at 528 3/4, down 1 cent. Wheat often leads when global supply or weather risk shifts. Even on small moves, traders watch whether wheat is building a base or losing support. If wheat starts to strengthen, it can stabilize the entire grain complex. If not, corn and beans will need their own demand story to move higher. In livestock, cattle held firm again today. April live cattle settled at $238.22, up 97 cents. The cattle market continues to lean on tight supply and steady demand. Stronger cattle, while grains drift, is a signal the trade still has confidence in the beef market. Traders will be watching boxed beef and cash tone to see if this strength continues. Feeder cattle also stayed supported. March feeder cattle settled at $367.75, up 32 cents. High feeder prices keep margin pressure in the system, but the market continues to find buyers on dips. Direction from here will depend heavily on feed cost and placement pace. Lean hogs were the weaker livestock market today. April lean hogs settled at $96.95, down $1. Hogs remain sensitive to demand signals and can move quickly when sentiment shifts. Traders will watch whether today weakens, continues, or stabilizes in the next session. In the energy market, energy continues to influence the broader commodity tone. March WTI crude settled at 64.20, down 16 cents. When energy holds steady, it can help support commodity sentiment. When it weakens, pressure can spread across the complex. Traders continue watching global supply tone and geopolitical risk for direction. Now the weather. Weather remains one of the biggest hidden drivers right now. Brazil's harvest weather isn't just about rain, it's about harvest speed, quality, and logistics. Wet conditions can slow movement and create quality discount, tightening nearby supply even in a large crop year. Argentina moisture remains supportive for crop development, but timing matters. Too wet or too dry at the wrong stage can shift yield expectations quickly. The market is balancing production size against execution risk, and that balance can change fast. In ag news, USDA confirmed a significant soybean purchase from China for the 25-26 marketing year. Demand appearing even during large South American production keeps the soybean market sensitive to follow-up buying. Brazil harvest progress. Harvest continues with mixed weather conditions across regions. The size of the crop is large, but the speed and quality of the harvest remain key variables for global supply flow. Livestock industry preparedness. USDA continues strengthening protection measures against livestock pest threats, including long-term infrastructure expansion. While not an immediate price driver, It highlights ongoing risk management in the cattle sector. Oil markets continue balancing supply adjustments and demand outlook. Energy direction influences input cost and broader commodity sentiment, making it an important background factor for agricultural markets. Question for tomorrow: does wheat stay quiet or does it begin leading? Because when wheat moves, the entire grain complex can follow. If wheat stays dormant, grains will need either a demand surprise or a weather shift to break the slow pattern. Markets don't always move fast, but they do move when pressure builds. Thank you for spending your morning with me. We'll be back tomorrow with the next signal from the market.